Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast. We're joined right now by Carol Massar and Mike Regan in for Tim Stenovic. Today, we welcome our audiences across Bloomberg Television, radio, and YouTube. And Carol, we were looking last year, 2021, a 27% gain on the S&P 500. Here in the first half, at the end of the first half of 2022, we've erased all of those gains here. A massive drawdown here in the first half of the year. It looks like it's going to be one of the worst first halves going back to the 1970s.
Romaine, who would have thunk, right, at the end of last year or late last year that this is where we would be, which also just reminds me how quickly market sentiment can change. And we've had some key reasons why. Of course, the war over in Ukraine and other factors, continued inflationary pressures. But it is something, Mike, that I have to kind of remember that markets have cycles. They go up, they go down, and they can change very quickly.
Right. And Carol, of course, I think the one thing to always think about in, the end of a quarter, end of a first half like this is what is all their portfolio rebalancing doing? Is it exaggerating moves one way or the other? We saw that big rally last week that might have been people sort of getting back into stocks to get those 60-40 portfolios back to where they should be. Now we're back down. I think maybe, fingers crossed, we'll get a clearer idea of sentiment once we get to the end of this quarter and into the next one.
Just trying to go through some of the benchmarks that did do well in the green. I mean, of course, you've got a lot of FX exposure in any of these plays, but Argentina did well, up 6%. Panama did well. Romaine, Chile did well. Portugal over in Europe did well.
Portugal, yeah. I mean, look, we make a lot of jokes here, but there are, of course, a lot of opportunities out there. And you even talk about some of the softness we've been seeing lately in commodities, at least over the last few weeks. But if you had bought into some of these commodities at the start of the year, you're probably having one of your best returns that you've seen in quite some time. Here are the numbers here on a daily basis, and I guess we'll give them to you on a year-to-date basis as well. The Dow Jones Industrial Average down about 0.8% here on the day. It's down about 15% on a year-to-date basis. The S&P 500 down about 0.9% on the day, down 21% from the start of the year. And the Nasdaq Composite going to finish the day down about 1.3%. It's down 29.5. We'll just round that 30% drop here on a year-to-date basis. The Russell 2000 going to finish the day down by about 0.7%. It's down about 24% on a year-to-date basis.
We're taking, a lot of a perspective here, right? Looking at what happened in the first half of the year. I was looking at the Baltic Dry Index. We were just talking about it with our market guest. I mean, this is down about 35% in the past month alone. So an idea of, what it costs in terms of shipping. And so it's just another indicator of kind of the negative sentiment, Taylor, that is out there, especially when it comes to the outlook.
We've certainly seen that for the year. You're seeing a little bit of that on the day, on sort of big days like today where we want to put things into perspective. I also wanted to refocus again on what we are seeing on the day. A little bit of red, even in the, quote, best performers for our radio audience. Carol, this feels really sort of defensive, right? Utilities, household products, goods, capital goods are up anywhere from 0.5% to 1.2% or so on the day. You go down to the bottom, you're getting software and services, technology, media, energy, autos. Those are off anywhere from about 1.5% to more than 2% or so on the day as well. Energy, as we know, has been a big winner for the year. A little bit of that unwinding today.
All right, so let's get to some specific names when it comes to gaining in today's session. So Costco, I think you might have highlighted this earlier, Romaine. This was among the top in the NASDAQ 100 and the S&P 500. Yeah. JP Morgan Intrepid Growth Fund boosting its holdings in Costco, reduced its holdings in Lowe's. You might remember earlier this month, the company came out with May comp sales that were really way above estimates. Stock is still down, though, pretty significantly for the year. Also want to mention Exelon. EXC is the ticker, and this one is up about 2.2% in today's trade, gaining despite UBS lowering its price target to 49 from 54 a share. The stock closing at 45 and change. They did maintain their buy rating. Related news, let's not forget the Supreme Court rulings. They're wrapping up today. The Supreme Court limiting the EPA's role in controlling emissions at power plants and combating climate change. So some flexibility for the energy industry. So we did see some move in some of those utilities. And then I just wanted to mention Spirit Airlines. SAVE is the ticker. This stock up another 6.4% in today's trade, officially delaying that planned vote on the proposed merger. Frontier, though, saying it's going to continue to talk with both of their suitors, including JetBlue. It does favor, though, Spirit, favors Frontier.
Yeah, Carol, let me tell you about some of the big movers on the downside today. Obviously, a down day, and some of the stocks leading the way. We've got Walgreens Boots down about more than 7%. Interestingly, because the company did maintain its guidance for 2022 earnings, beat estimates for the fiscal third quarter. But the big story is really investors questioning their strategy after it abandoned its planned sale of the UK Boots chain. That was expected to bring in more than $6 billion. We also have GM stock down about 5%. There's a little bit of news there. Reuters said it called off its plan to sell its Indian plant. But also, I think the story we have out is just that recession concerns are front and center, especially for investors in automobile stocks. That's probably a similar story with one of the other big movers, which is Caesars, the casino chain. They're down about 5.3%. Nasty year for that stock, down 60%. This even after Las Vegas reported that May gambling revenue on the Strip rose almost 12%. Yeah. There's another story, Romaine, about...
I'm just going to interrupt you real quick here, Mike. We need to get back to some of the superlatives here. Just to recap real quick, the NASDAQ 100 finishing the first half down 30%. Now, that's the biggest decline that we've seen going back to 2002. The course of superlative we've been talking about all day on the S&P 500. Worst first half decline going back to 1970 here. Some of the individual movers, you talk about Tesla having its worst quarter ever. Amazon dropped the deepest since 2001. And Caroline, this sell-off that we've seen here in the U.S., it isn't confined to the U.S. This was global in nature.
It was. Look at the stock benchmarks when you look at GMM. Look at this beautiful summation of just how ugly the first half of the year was. S&P 500 up by 21% if you round it up. Canada, the index there, off by 11%. It was ugly over in Asia. You saw 16% sell-off in Europe. If I'm looking at a currency perspective, look, the only area of green from you're looking at your G10 currencies, the only area of strength up 7%. The US dollar index. Really, yen, extraordinary weakness being shown in the Japanese yen, which lost some 18% of its value versus the US dollar. British pound weakening to the tune of 10%. In fact, we saw the absolute light in green, which was commodities. But even remember, on this month, we've got the first time oil is falling in this year on a monthly basis, because we start to see OPEC Plus, for example, committing that they're going to be increasing supply. But on the year thus far, Brent crude up 40%, WTI crude up 40%. Don't even get us started on what gas oil has done, up 76%, what natural gas in the US is up 50%. It's doubled over in Europe. And Taylor, it's been a story of absolute soaring yields in Australia to Canada to Sweden to Singapore, Asia, Europe. And you tell us about the US.
That is like a Christmas light show, Caroline, behind you. Take a look here, and I want to do some size and scope when you think about a two-year yield. We started the year with a two-year yield at 75 basis points. We jumped to 350, and we've climbed our way back to 297. That really shows sort of the influence that this Federal Reserve, the narrative, the hawkishness has had on this market. We also want to look at the 10-year yield. We started this year at about a 155, again, jumping to 350, falling all the way back to about a 302 here, briefly seeing an inverted yield curve that we had this year, briefly, of course, jumping back below that 3% level. I think as we pivot to yields and we talk about the Fed, the weakening demand environment, that's one thing we're hearing out of Micron, falling here in after hours, talking about some big weakness that they're seeing on the horizon. Really in that forward forecast, Caroline, looking at fourth quarter adjusted revenue, $6.8 to $7.6 billion. Estimates were over $9 billion. Forward guidance of fourth quarter adjusted gross margin falling to as low as 41%. Estimates were about 48%. Seeing a huge hit here to the bottom line. Fourth quarter now forward adjusted EPS, 143 to 183. Estimates were for a 257. So really starting to see, Carol, some weakness here as they highlight the weakening demand environment.
That's ugly. And that's what we want to know from what the companies are going to say in these earnings report and the executives. Demand. What are we seeing on the demand side of the equation? Supply has been a problem for so long, right? And so when you start to see the demand, the one thing I wanted to mention, the NASDAQ we mentioned is down about 30%. Romaine, the SOX is down about 35% so far this year. So we've really seen a beating in stocks.
And we're heading into this earnings season. Obviously, Micron lagging with regards to its fiscal structure here. But when you hear them start to talk very explicitly about weakening demand in its words, and really about the idea that it needs to now moderate that supply growth. And I think this is interesting because we talk so much about inventories on the retail side, and we forget with a lot of these manufacturing companies, you know, they really stocked up as well on their components. They really sort of shifted their supply chains in a way to accommodate what they thought was going to be a persistent upside. And now, if that upside is now to the downside, do they get left holding the bag?
You know, Romaine, a day like this, I always want to check in on the VIX and see what the volatility market's up to. Not really much of a move there, surprisingly. The VIX only up about half a vol point to 28.67.
Do you care about the VIX at the moment?
I don't care about the VIX, but to Mike's point, I will say this. When you look at realized volatility on the S&P 500, it's through the roof. I mean, the only time you really saw it was back, of course, during the pandemic, and that was kind of an outlier. You sort of take the pandemic out of it, that March 2020, April 2020 levels, and this is like the worst we've seen since the global financial crisis. Yeah. You go back to where those year-end targets are, not just for the S&P as a whole, but look at some of those targets on the individual stocks. We're nowhere near them. Yeah. Nowhere.
I always care about the VIX, Caroline.
Good. No. Well, I was being told that I shouldn't anymore because it's too expensive and no one's using it anyhow. But I'm glad that you're still out there giving it love.
What's the Vixen doing?
That's such a better name, isn't it?
What's Carol doing? Why is she laughing?
I'm just listening. I'm just enjoying the view. All right, we got to run, guys. That's going to do it for our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We will be back again, same time, same place tomorrow.